have many people right now where we find that they feel as though they're stuck in the mud and they're not sure where to go. I think many times they might be blinded or hurt by what they're reading in the paper or watching in the news and feeling as though everything is coming down all around them. But ladies and gentlemen, as we're going to go through this, I can't remember in my 30-plus years in the business when there's been a better time to be in the business. The opportunities are just very huge. So let's take a look. I guess to understand, where we're going, we have to know where we've been, where we are, and where we are going. Let's take a little look at this industry. In 1972, there were 175,000 members of NAIFA, which was then called an NALU, the National Association of Life Underwriters. And today, NAIFA is the National Association of Insurance and Financial Advisors. And today, there are 55,000 members. I just read yesterday on page 48 in the National Underwriter magazine, they're talking about the prospects for NAIFA and the industry. Ladies and gentlemen, if there's one thing that we accomplish out of this webinar today, if you're not a NAIFA member, you need to be one because they are our only lobbying organization. But just take a look at those numbers a little bit. I started in the business at that time, 175,000 members of traditional guys and girls out there selling products. Today, 55,000. I'll let you determine as we go on what those numbers mean. How about this? The average age of the insurance-based advisor is 58 years old. 58. The average age of the Financial Planning Association member is 55. Bottom line, this is an aging field force. And, if this is really the way it is, what does that mean for those of us still in the business? Well, there's far less competition. For all of you that have a little gray hair in your head as I do, and that have been around since the 70s selling this stuff, you remember the time when we went into the kitchen table or into the business, and if we were lucky enough to take the application and make the sale, we knew that there could be another appointment 1 hour, 2 hours, 3 hours after us, and you could get the call from the not taken for a not taken. Competition was everywhere. The second box there says the field force is declining by a net 5% per year. That's according to LIMRA, Life Insurance Management Research Association, LIMRA Global, the think tank in our industry tank, as well as the financial services industry. That number is a little bit deceiving. That's a 5% net number. That's after New York Life, Northwestern Mutual, Mass Mutual, anyone that has a National Life that has a career company. After their hirings, that's what we're down net 5% per year. And they've got the CEO of New York Life on the front page of Mass Mutual, Roger Crandall of National Underwriter, and then they're interviewing the New York Life guy. They're up 25% in hiring. A lot has to do with the economy. But even after all of that hiring, we're still losing 5% per year. Well, that number is a little bit like the unemployment rate in America. We might say we're at 9.6, but when you take a look at the underemployed and those that quit looking, we're closer to 18, 19, 20. Same in our business. We have a lot of great men and women that are 75, 80, 82, 85, 90 years old, still attending NAIFA meetings, Society of Financial Service Professionals meetings, still keep their license active. Sell a little bit here and there, maybe $5,000 a year in commission, maybe 50, maybe 250. But those are really, in most cases, those are the underemployed. They just haven't quit yet. And life insurance people never quit. So therein lies a tremendous opportunity. Not nearly as much competition and an aging profession. Too bad for the industry. Good for all of us on the phone. Too bad for marketing organizations that all they do is put out product and quite frankly don't run meetings like this, because we, not unlike you, we're looking for good prospects. We're looking for clients. We're looking for people that understand that if we do a good job for them and we help you make more money and have a better practice, you're going to give us that business back. Middle Americans need and want to talk to an advisor. Only 2 out of 5 Americans own life insurance today. that's a little bit of a misnomer, that own individual life insurance. 2 out of 5, 40%. Is slightly higher when you consider group insurance. Lowest percentage since World War II. Having said that, the sale of whole life insurance in the Wall Street Journal, Tuesday, Guardian, 152% whole life sales up for the people between 35 and 50. Sales to seniors, 60 and above. Single premium life, up. Not enough people talking to them, though. Pre-retirees and retirees feel as though they need or will need more income. That's another big concern. They also worry about chronic illness and how it could wipe out their nest egg. We want to show products where we can build a moat around their castle. If you had a piece of paper and you're making a presentation to your client, just draw what looks like a house. Try to make a castle. I always explained I wasn't very good at artwork, but please bear with me, Mr. Prospect, and assume that this is a castle, and that's your nest egg. And if you've seen those Capital One guys, you know, what's in your wallet? Those Capital One guys, those Huns running around, what that is, that's chronic illness. Those are other things that can hit your retirement income, your castle. Now draw a moat around it. That's what we're going to do. We have products right now that are hybrid products. They're combination products. They're life insurance products. They're annuity products that will allow you to have access to all that benefit in the event that you could not do two of the activities of daily living. And on the income side, they're going to need more money. I don't know if you saw this in the Wall Street Journal this week. Looks like no increase in Social Security again this year. Why? There's no cost of living increase. Now, in the past, they went ahead and they did it. Last year, no cost of living increase. 4 years previous to that, the 4 previous years, 5% a year. So in other words, I think Americans, retirees, got used to that extra 5% of their Social Security. Well, here are 10 10% over 2 years. They're not going to have that increase. Let's give them that increase. We can do that. I talked before about some of these hybrid products, and we're going to go back to those in just a little bit. But let's talk a little bit more about capital transfer. This is one of the fastest growing markets in America today. See, many people have a lot of dollars stashed away for emergencies, opportunities, or to be passed down. But if you've got a client that has $100,000, it's going to go down to Jimmy, Judy, and Johnny, the 3 kids. Yeah, they're going to love Grandma when she passes down to 100 and they pay tax on it. And maybe it goes into the kids that are out there working. Not only will they pay tax on that, that extra 100 grand could jack them into a new tax bracket. What if we could turn that 100,000 into 200,000? Oh, and by the way, have that money be paid out tax-free. Oh, and by the way, have it be paid out in the event of a chronic illness over 33 months. Oh, and by the way, maybe we can bonus them 10 or 12% in the first year to absorb taxation or surrender charges. Oh, by the way, how about if we took that money and 1035 it into a SPIA and rolled that out over 7 years, spreading the taxes? Oh, and finally, let's not forget that just about all the simplified issue products that we sell, not only do they not have an exam, not only do they not have tests, it's a telephone interview and usually a prescription check. And just to make sure that we don't get our clients feeling as though they're backed up into a corner and they can't change their mind, we're going to give them a money-back guarantee day one. That's right. You don't like it, bring it in. It's just like if they went in and bought that Mercury Marquis and they drove it for a year and they came back into the dealership a year later. They said, Mr. and Mrs. Smith, how you doing today? Fine. How's the Marquis? It's great. Driving great. Oh, it's perfect. We just took a trip down to Florida. Loved it back and forth. Got into some snow, slid around a little bit, but we just had a great trip. Well, that's great. What can I do for you? Then the couple throws the keys on the counter and says, we want our money back. You want your money back? Yeah, well, Nothing's wrong with the car. I just want my money back. Well, you've had the benefits of that car. You've been driving it around. You had it for a year. I want my money back. They're not going to do that, right? We'll do it. We'll do it. We've got 2 or 3 companies. It's like driving a Marquis for a year, driving around the country, see the sights. And if you're not happy, end of the year, come on back, give you your money back. What's it cost you? The loss of interest on your $100,000? Where did you have it? In a 5-year CD? Probably not. Let's say you were earning 2%. So $2,000 was the cost of doubling that 100 to 2 for that period of time, and you probably had it in a money market fund paying 0.25. We're going to talk more about interest rates as we go through here, but remember, according to the USA Today, the money section, last Friday, front page, average 5-year CD in America, according to Bankrate.com, 1.68%. 1.68%. Yeah, you can find higher rates. I can find it here in town with PNC. We can find some jumbos at 2.25, maybe 2.5. But 1.68, that's the average rate. Means equal number above, equal number below. If you did nothing else but invest 75 cents a week, get the Friday edition. Carry it around with you. Show it all week. Boy, it makes MIGAs look awful good when you pull that piece of paper out. So think about capital transfer. Hot market, we can help you get where you want to be. Hybrids, do you know what they are? Are you offering them? Your clients want them. We have annuities out there. For example, a 7-year annuity. There's a 7-year annuity with a 3-year guaranteed interest rate. Now, what they're going to do, let's say you put 100 in, since we're using $100,000 here today, I can give you a $100,000 annuity, but I can give you up to $300,000 of long-term care benefit. True long-term care benefit. No exam either. Not simplified issue, but quick issue. Simple issue, I like to call it. Give me the 100, I can turn it into it. 200, 250, or 3. How do you pay for it? What's it cost? Well, the Pension Protection Act really helped us out. They say, you know what? You take money out of your annuity to pay for the long-term care rider. Oh, yeah, and no taxation. That's great. But, boy, that'll eat up my annuity. No, it won't. Companies that we use will not even issue the policy unless at the end of time, whenever, your annuity shows positive growth. Your annuity must have net positive growth year 1. So whether you get 1, 1.5, or 2, what's the cost to your client to have an extra $200,000 of long-term care benefit on top of the 100? That moat around that castle we were talking about, cost of 1% on that 100, 2%, so they net out with 1% or 1.5. What were they getting in the bank? Let's say 2. So they gave up 0.5% to have $200,000 of long-term care, $200,000 of money in that moat around their castle. Your clients are buying them. You ought to offer them. This is truly our day in the sun. I don't think there's ever been a better time. People are wanting to buy life insurance. They want to talk to an advisor. They truly do. Front page of the Wall Street Journal this Monday, the 4th. Not only the front page of the Wall Street Journal, but on page 22, the entire page. They talked about this Congress that's in there right now. It depends what happens. Put all political preferences aside. They need money. They need tax dollars. And they say now only the wealthy is buying life insurance. And they want to start taxing it again. They won't do it this year while the economy is really down in the crapper, but they're going to come after it because they say we're not taking care of America. We're not taking care of the widows and orphans. And they've got all the different reasons. Well, of course, the wealthy see the benefit in this. Guardian Life and Mass Mutual say they only want to work with people $75,000 in income and above. I understand that. That makes sense. We're not going to go arm wrestle for a $125 term premium that the guy wants to pay monthly at $10 a month and make your commission and sit with him for an hour and a half and do another callback for another hour and a half and hope he doesn't lapse. But they're going to come after our products. They'll be grandfathered, and we'll fight, and that's why you need to join NAIFA. But right now, people want life insurance. Middle America is not being called on. They want and they need income products. These annuities with a guaranteed lifetime withdrawal benefits. They need the hybrid products, and they need flexibility and liquidity. These are the most liquid products in America. instant liquidity, immediate liquidity with every policy. Now, that doesn't mean you can take all your money out with every policy, but it's immediate, instant liquidity. You can get some money out, and with some, we have guaranteed return of premium. Well, it appears that usually the biggest problem when we talk to people is prospecting. Many of our best people in the business, many of our best friends and associates say that prospecting is still the biggest challenge. Notice I said challenge. I didn't say problem. To them, it's a challenge, and it's a process. Because you don't just prospect when you run out of leads. You have to have a process. And you have to try to get in front of pre-qualified prospects under favorable circumstances on a regular basis. How do we do that? There's a number of ways, and you need to employ all of them. Most important thing is to take a look at all the lead generation tools. Things that I find that work, used to work for me, especially in the first 20 years when I was out cranking it. And during the time when I was building agencies, career shops, housing 30, 35, 40 people, I was never the biggest salesman in the country. That's for darn sure. But 20 years in a row, from the time I was in college, making the $1 Million Roundtable each and every year. I'm a life member. I'm a CLU, built large agencies. Most of you on the phone know that I've been involved buying life insurance companies, been president of life insurance companies, running them here as well as in Luxembourg and Bermuda. But I'm a regular guy that still mows my yard, likes to go to ball games, and still playing a rock and roll band. So I've walked a mile in your shoes, and I understand that nothing starts until somebody sells something. And that's why I'm doing this here today. I respect what you're doing, and it really upsets me when I see so many having problems. And they're looking for silver bullets. There's not one. I don't care that there's less competition. It's still a trying business. But it is our day in the sun because everything around us, all the financial markets are in quicksand, quagmire, stuck in the mud. People don't have faith. They've been shellacked in their 401k. I'm not saying they need to take all their money out, but they, for God's sakes, need a safe money place. They don't have enough income. Quit selling accumulation. We have to sell income. We have to sell capital transfer. We have to sell that protection moat around their castle where they house their nest eggs, those legacies. I know it's not just money today. It's not just what you passed. It's not the dough that you pass down. That's part of it, but it's what you know. But boy, the ability to take care of friends, families, kids that are challenged, grandchildren that are gifted. But how do we keep in front of these people and turn them into clients as opposed to customers? Newsletters, the Ohlson report, since February 2007 when we reopened, it's come out every week. Thank you very much. We have about 15,000 subscribers. And we try to keep that thing crisp. As you can see, we even changed the look. I've got a great young intern from Jason who goes to the Harbor of the Midwest, Ball State University, my alma mater, and he's then here doing an internship in his last semester and is doing a great job helping us with all of our interactive tools. But you can buy newsletters. You can do press releases. We can help you do that. You can send out case studies to your clients. Say, I have a client, XYZ changed the name. Here's what they wanted. Here's what they needed. Here's what I did. Would this be of interest to you? Give me a call. What about what we're doing right now? Are we still thinking that the people that are buying our products from 55 years old are still all have a Walkman on? I'm the only one that has a Walkman on when I mow, I think. What about a webinar to your clients? What about establishing a good database of email addresses, getting information out? And as we're doing this here today, this webinar is on demand. We can tell you how do you do this and how do you store it and how do you put it on your website that your clients can always look at and or you can send it to them. The other thing that these things do is a lot of accomplishments. Lead, we're going to get leads from these things. It's increased awareness about you and your firm. It builds loyalty, and we're going to be growing your database. The names and the information are key. If you don't have a good database, we can tell you where to go, good discounts, do NAIFA. A lot of places you can go so you can have that information right at your fingertips, and be able to calculate and not have to use the filing system that we used to use in the 70s, 80s, 90s, and even into the early 2000s. But as I said, this is truly the client acquisition process. It's not just getting leads. You know, speaking of leads, I was just talking with Alan Kramer yesterday, owner of Kramer Direct. He has a new annuity piece out today that is truly drawing, averaging 3.1%. And we've gone through the numbers. And this is what they've done is they've taken one of the older pieces that they had that was drawing 1.5 or 2 and just really re-emphasized taxation and talked about the possibility of taxation going up in the future. The response went from 1.5 to 2 to 3.1. One area in Illinois was able to grab over 5%. Now they have veterans leads, aid and attendance leads that we have that we advertise a 5% return, but we think more closely to 9, 10, and we've had up to 17%. I'm not going to get into that too much, but we've had just recently, we've had some people that have had over 100 leads, and they weren't able to sell anything. And out of the 100 leads, they had about 35 appointments. And it really has me very concerned. We have a complete, on our website, I have the complete presentation, a choice of 3 presentations, all the script that goes along with it. I've written the phone approach, the answer to objections, how to fact find. And I've even done 4 different 10-minute videos that go according to the presentation process. You know, the opening, introducing yourself, presenting the need, closing, overcoming objections, and then the art of obtaining referred leads. Ladies and gentlemen, we've got the tools out there, but I need to continue to say this is not easy. This is hard work, and it's going to take some time. So where do we get these prospects? Where do we get these new sources, these new people that can become our clients or centers of influence for us and help us get new prospects? One is direct mail. As I just said, it is tried and true. For $500, you're going to get either 15, 30, 50 leads or more. Now, how do you warm them up? We have a complete program that we will give you. We used to do it out of here. We don't anymore. But we have the letter, the package, everything that you send to your prospect after you receive the direct mail card from them. And we believe that we have been able to increase the appointment setting, converting the lead into an appointment by almost double. This credibility marketing presentation, this is part of it too. We want to talk about your background and your presentation. We're going to help you put all those things together so you do have a very good presentation. Get to your clients, whether it's one-on-one, belly-to-belly, elbow-to-elbow. Now, we're going to start going rapid fire through a number of things here because I said this could be about a 35-minute webinar, and I want to stay to my word because I could talk about this for hours. But let's take a look at a lot of different things in this next 10-minute period that I think can help you make your business in the balance of 2010 explode and really catapult you to new heights in 2011. Okay, seminars, workshops, types, lunches, dinners, everyone's doing those. What about service groups, Kiwanis, VFW, American Legion? They want to have it. I can show you how I can have them fill the room for you. Pay them to fill the room by giving a donation to a scholarship fund. Have them put 50 in a room. Tell them that you're going to pay $20 a head. Let them buy the lunch. Would you pay $1,000 to have 50 buying units in a room? I think you would. Educational. You can have it in a library setting where sometimes you give a donation. You buy water. There is no food. Client appreciation events. When you get your clients there, have them bring the kids. Those 40-year-olds that want to buy a whole life that Guardian Life is selling. Have those people in there as well. Client appreciation events. And nobody does breakfast. What am I, crazy? I love my folks. They're 85 and 81. My mother's up at 5 o'clock in the morning. She's Italian. We always used to joke. If you got up and went to the bathroom, she would come in and make your bed, and it was time to get up. Seniors get up early, do breakfast, internet leads. How about $15 a throw? Are they all going to buy from you? No, but what you're going to do is you are going to get them information. You continue to give them information each month. You keep them on your mailing list. It doesn't cost a mail. They responded to you via the internet, and why not respond to them via email? Invite them to your seminars, trade shows, and exhibits. How about the home and patio shows, senior expos that are all around? Get an exhibit. Be next to, I don't care, a guy that does cabinets, a guy that sells anything, the Tupperware guy. They're in there. Pass out your card. Do some case studies. Have a video going while you're there. Refer leads. What about your clients' children? Ask for an introduction. Don't you want to meet the people that you'll be delivering a check to eventually prior to time of death? State that to your clients. I think they will want to get everyone together. Total account development. You must get a larger percentage of the client's wallet. We have plans for that. Capital transfer. We talked about passing that money down as a tax advantage transfer of assets combined with leverage. Leverage means you give me 100, I'll turn it to 150, 175, 200,000. Sources of funds. Money is earmarked to be passed on to family, institutions, and or charities. Could be in bank accounts, money in low-yielding annuities, other assets. While annuities are a great product, a great place for accumulated assets and distributed income, they might not be the best tool to be used in capital transfer. Have you ever told your client, you know, your annuity might not be the best place for your funds, considering what you told me, considering what you want to happen with these dollars? How about these things you can say to your clients to just get them talking? You know, many of my clients believe that it's all about the income right now. They're done with the pile of money. Many of my clients are concerned about current low yields in the marketplace. How about you? Many of my clients are unwilling to accept stock market-related risks. Are you? Many are concerned about outliving retirement assets. Does that bother you? Many have concerns about keeping up with inflation, cost of living, higher taxes. What do you think about that, Mr. Prospect? Many are unwilling to lose control of retirement assets by annuitizing some assets. Do you have any thoughts on that? Income planning, it's the key. Some financial professionals, Mr. Prospect, can offer wishes, hopes, lukewarm promises, and potential. I offer rock-solid guarantees. Mr. Prospect, I have two questions for you. One, how much do you need? And two, when do you need it? Just answer those two questions for me, Mr. Prospect. How much do you need and when do you need it? And I will determine how much you need to place in this product, and I can guarantee the successful outcome. No ifs, ands, or buts. It's going to be there. How about the lost Social Security check and the 10% solution? You ever talk about the lost Social Security check? I'm not saying it didn't get in the mail. I'm talking about you got a husband and wife. One's making $2,000 in Social Security. The other one's getting $800 a month. One dies, bingo, check gone, small one's out. Here's a situation. We got a married couple, both around 75 years old. Two Social Security checks coming in, one for $2,000, another for $800. They're concerned at death of a spouse, they're going to lose the $800 check. And don't forget this, as we talked about earlier on, there will probably not be an increase in Social Security payments in 2011. There was not in 2010. The previous 4 years, they were 5% a year. So in other words,